Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, it's official, the Nasdaq-100, the top performing index on the year, it looks like.
Yeah, we, after last year, the NDX outperformed the S&P 500 by 31 percentage points. And for most of this year, it had been lagging, especially from February through that May timeframe when the NDX saw a deeper pullback and other groups and sectors took over the leadership role. But as of the last couple of weeks, the Nasdaq 100 has resumed that perch as the top performer. It's up 28% year to date. The S&P 500 is up about 25.5%. So both indices doing well on an absolute basis. But despite the strong outperformance last year, NDX is still outperforming now this year to date. So phenomenal move.
Yeah, it's interesting. I read a report by LPL Financial, and they were kind of saying that not only was this the work from home trade, but technology is allowing us to be a work from anywhere, a hybrid society that we live in right now. So that could fundamentally be why it's contributing to it. But let's take a look at the technicals, what the price action is confirming. Let's take a look at your Bloomberg here.
Sure, absolutely. Just wanted to highlight that I see a lot of bearish sentiment out there, especially on social media, and maybe it's just the people I'm following. It seems like everyone's trying to call it top. We have seen a pullback over the last 2 weeks in the Russell 2000. So when people are highlighting the bearish breadth in the marketplace, it's really recently been amongst those small and mid cap stocks. Month to date, the Nasdaq 100 is up. Quarter to date, I should say, it's up 12%. Month to date, it's up about 4%. So it's still outperforming in those time frames versus all other benchmarks. Consumer discretionary makes up 20% of the index. You can see this is a chart of the S&P 500 consumer discretionary index. It had a big breakout in mid-October. For the month of October, it was the top performing sector, up more than 10%. A brief pullback after that sharp move, but now we're seeing the uptrend resume. Some critique there is that it's a weighted index and maybe it's just a small number of stocks driving performance. But here is the discretionary equal weight ETF, and this also made a breakout. A little bit of a lag. This took place in about late October, and this just a week or two ago made a breakout to new highs as well after, let's say, 6 months of sideways consolidation. So we know breakouts from ranges tend to have powerful momentum to the upside. We've seen that the last 2 weeks we're consolidating, but note over the prior 4 weeks it was up about 12%. So that's expected price action. The tech sector, which is 50% of the NDX, you can see today is breaking out to new highs as well. So certainly bullish price action. When we look at the equal weight tech index, that also made this week a new 52-week high. So again, we're seeing the equal weight indices for these sectors confirming what the weighted indices are doing, and they're making new highs. So very constructive price action. This is the tech sector versus the S&P 500, a ratio. And we can see this is breaking out after being in a range from September of last year through early November. So nearly 10, 11 months, the ratio has been in the sideways range. Tech is now breaking out again. So very constructive signal for technology. When we now look at the ratio of the Nasdaq 100 versus the S&P, it's on the verge of breaking out to new highs as well. It previously peaked back in February, bottomed back in May or June, let's say May 15th, and now is on the verge of breaking out to new highs on a relative basis as well. So very constructive charts there that we're showing. This here is the daily period chart of the Nasdaq 100. After a brief pullback from 52-week highs, today it made a new intraday 52-week high, and if we close right here, it'll make a new closing high. So again, very constructive. And if we look at this on a weekly time frame, we can see the candlesticks, if we zoom in here, look very constructive. So overall, despite the sentiment out there, which I see traders thinking the breadth is getting weak in the broader market, at least for the NDX, all signs to me look very constructive from here.
Yeah, Brian, you know, it's so interesting when we think about the big components in the Nasdaq-100. We were talking about the strength of the technology sector and certainly the strength of the consumer that has really been providing some support to this market as well. When you think about it, the big constituents like an Apple, like an Amazon, they're effectively technology companies and consumer companies. So it's like you get double the punch there.
Yeah, that's very true. You know, they're in the tech sector, but certainly a lot of exposure to retail. And you know, both companies are doing phenomenally well. We know Apple's numbers, you know, up about 20% this year and up over 80% in each of the prior 2 years. So, you know, these companies are firing on all cylinders. Amazon is in more of a consolidation period right now, but you know, that long-term trend is certainly to the upside.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.